BlackRock has once again given fresh insight about this recent market rally and is giving fair notice about the interest rates and the Fed's possibly more aggressive rate hikes on the way. We'll also take a look at what the markets are doing and where we stand today with the investor sentiments. Hi, and welcome back to your channel. Bitcoin Adamus here. So first, let's take a look at the markets and take a moment to scroll down and hit the like button. As of right now, Dow Jones is trading about 272 points higher, and that's mainly because of strong earnings reports from Walmart and Home Depot. But S&P 500 is only trading about 14 points higher and Nasdaq 7 points lower, so basically unchanged. So overall, it's a rather boring day in the markets. Same thing goes for the crypto market. Bitcoin is trading slightly lower from about 24,000 to right now at about 23,869, and Ethereum trading around 1880 from 1900 that it was yesterday. So why did the markets hit the pause button? I would say a few things. One being that the markets are waiting for the Fed's minute meeting tomorrow, and a couple other things coming out later this week, such as the jobless claims coming out on Thursday. But I also find this interesting. BlackRock saying that there will be uncomfortable trading patterns ahead. Kate Moore from BlackRock is saying there isn't enough clear economic information to take on new risks, so investors are sitting on their hands. This is true that there's certainly so much uncertainty in the markets that investors just aren't sure what to do next and whether it will be safe for them to trade or invest. So a lot of investors have chosen to just sit on the sidelines and see what will happen next. More on BlackRock in just a moment, but first, let's take a quick look at Bitcoin chart on a one-day. We're still in this channel that we've been tracking for a while now. And I would say this, Bitcoin does not look very strong right now. I mean, look at the pattern in this channel. Every time it came up to the top of the channel, it just got rejected. It came up again, got rejected. So over and over, just tried to break out of that channel and got rejected time after time. And now the price point has come up to this important level of 25,000 to 25,500, which also coincides with our channel. And this time around, it didn't even come up to the top of the channel. It just got rejected off of that line. This is beside the fact that if you zoom out, you will notice that Bitcoin is actually making a bear flag, is actually forming a bear flag. And what this means is that normally, not guaranteed, but normally, more than often, it will actually break to the downside rather than the upside. Now, could it actually have a rally to the upside and even break through and then come down after that? It's possible. But remember that the end result is more than likely breaking to the downside. And of course, as you know, in the markets, there is no guarantee. In fact, the only guarantee is that there is no guarantee. Within the past few videos that I've made, I have repeatedly said that around the 24th of this month, give or take a few days, will be the turning points for this current market sentiment. Meaning that this upwards rally that we have seen within the past couple of months will start to reverse. Now, we may or may not feel the reversal impact immediately, but this will be the starting point of the next leg down. If you take a look from the 18th of June, which was the after that waterfall crash, to about 17.5, in 2 days, it will mark a 2-month rally to the upside. It has gone up quite a bit. So from about 17,500 to a high of about 25,300 the other day. And time after time, even though we have gone up, Bitcoin has shown a sign of weakness. So we are on the 11th hour and time is running out. If you do have a skin in the game, whether in crypto or stock, I would say have a game plan. Have a good exit strategy in case markets don't go the direction that you had planned for. And be cautious. And don't forget to subscribe and hit the notification bell so you can get notified of the next turn of events as they unfold. As I mentioned in the past, towards the end of this year and early next year, we will witness some very unpleasant market conditions. And who knows, maybe we can sail through those rough markets together. Now back to BlackRock and their thoughts on the market. So BlackRock is sticking with its recommendation for investors to be underweight in stocks, calling the current rally unsustainable due to the deteriorating earnings and continued interest rate hikes from the Federal Reserve. And I would add crypto to that as well. This calm and quiet notion that we have seen in the market within the past few days just shows the uncertainty level in the market. Now, within the past couple of months, we have had this market rally. So basically today, the S&P 500 has surged about 18% from mid-June, while Nasdaq 100 has jumped more than 20%, as inflation has showed signs of cooling, and the Fed signaled that the future interest rate hikes could be smaller than its recent 75 basis point hike. My thought on this is that the investors have definitely jumped the gun. I mean, just think about this. While the notion of inflation peaking and cooling down is a great sign, we are far from knowing what the end result will be. For all we know, it could turn into deflation, which could signal a deep recession on the way. Whether the Fed will raise the interest rates another 75 basis points or not, we will definitely find out. But here's what BlackRock thinks about it. Stocks jumped on hopes of the Fed pausing hikes soon as inflation edges lower. We think that's premature and see inflation settling above pre-COVID levels. And I agree with that. I mean, think about it. If you go back to 1922, which is exactly 100 years ago, let's say, for example, the price of a loaf of bread, and you look at its prices over the course of the last 100 years, you will see that it has gradually gone up. And that's just a part of a healthy economy. If the price of that loaf of bread went lower instead of going higher, and all things being equal, then nobody would want to make that loaf of bread to sell because it wouldn't be worth it. They wouldn't make any money off of it. And I agree that inflation will not go back to pre-COVID, which was around 2%. Now, for example's sake, let's say that the Fed actually brings it back to, let's say 3% or 3.5%. Let's say even 4% instead of the 2% that it was at. So for the Fed to bring it down from the 9.1% that it was at last month at its peak, all the way down to 4%, they would have to raise the rates by a whole lot. And that would definitely put a damper on the stock rally that we've seen within the last couple of months. Not to mention a recession and all of its consequences. BlackRock also warned that investors shouldn't be too hopeful that the worst of the stock market decline is over. While no one knows for a fact what the future will have in store for us, I believe we should at least take these warnings serious and prepare accordingly. So in the event things do take a turn for the worse, we don't get caught off guard. With all the crazy market conditions that we have seen since the beginning of the year, don't let the past 2 months of market rally make you lose sight of the overall bear market that we're in right now. With that in mind, my friends, I bid you farewell, and until next time, stay safe and enjoy every moment.